Good afternoon, everyone. Welcome back to another episode of Dojo Live. Today is Tuesday, October 5th, 2021. I'm Tulio Siragusa, broadcasting from sunny Southern California. Welcome to the show, and I want to welcome my co-hosts, Carlos Ponce in Cuernavaca, Mexico, and Kim Lantis in Hermosillo, Mexico. Hi, guys. Welcome back.
Pleasure to be here, Tulio. Thank you.
So it looks like everything's up and running across the Facebook land. So we got this broadcast going on everywhere. We had a little downtime yesterday, but we're happy to have our guest today, Caleb Avery, who's the CEO and founder of Tilled. Welcome to the show, Caleb.
Hi, thanks for having me on today.
And today we're talking about payment processing, payment facilitators, PayFac. When I first heard PayFac, I started thinking of AFLAC. That's the kind of thing that came to my mind. But let's find out what this is all about. What is this? Yeah, exactly. Let's see what this is all about. It's an important thing. If you own a small business or you're a solopreneur or you're a dentist office or what have you, you're going to want to listen to this. This is an important thing for you to learn and know. And if you're a software company or a platform company providing services to those industries, you're going to want to listen to the show as well. So let's get right into it. But before we do it, let's get to know our guests a little bit. Caleb, please tell us a little bit about yourself. Welcome to the show again.
Yeah, absolutely. Thanks for having me on. As far as my background, I got started in the payment space by co-founding a credit card processing business while I was in college. So when I was at Furman University, my partner and I started going door to door selling payment processing services to small business owners, originally much more brick and mortar, retail, restaurant, liquor stores, salons. But over time, we started getting brought in on these consulting opportunities for larger software companies. Think like a dental software platform, onboarding dentists onto their platform. And a lot of these businesses were processing anywhere between about 100 million up to $1 billion a year in annual processing. And that was really where, I got the flavor for the payment facilitator model and really starting to understand a lot of the benefits of that model relative to the traditional processing models, which is really where I got started in the space.
Awesome. Door to door, huh? So have you heard the good news about payment services? I can just imagine how fun that was. Tell us a little bit about Tilled. What started Tilled? What was the idea behind it? And what do you guys do?
Yeah, so Tilled, the platform is called PayFac-as-a-Service. And so as I was alluding to, I was doing this consulting work with these larger software platforms, and especially the bigger platforms were tired of a PDF-based onboarding experience. So if you were working with a traditional like First Data or TSYS type processor, you were sending out a PDF to that dentist to try to get them to sign up for your integrated payments experience. And for these modern software companies, the idea of sending out a PDF to your customer and asking for a driver's license and voided check and previous processing statements was really not a very alluring experience for them. And the PayFac model, which Stripe, Square, Braintree, PayPal really made famous, is all about this idea of an instant digital boarding experience. The problem, though, was in the process to become a PayFac. And so historically, that was a 2-year multi-million-dollar process to become a fully registered payment facilitator, which is why, there's tens of thousands of businesses that could benefit from this model, but there's only a couple hundred PayFacs. And so there's this huge disconnect in the process. And the idea behind PayFac-as-a-Service is to simplify that 2-year multi-million-dollar process into something that an average software company can come to Tilled, plug into our APIs in about 2 weeks with zero upfront costs and get started and leverage the benefits of the PayFac model.
Great. So before we go right into the topic, I just want to get a bigger picture clarification. I recently spoke with a company that's in the healthcare space, and they create solutions for a dentist office, for example, where they can leverage their platform and white label it to do appointment booking and all the things that they need to essentially manage their day-to-day business with their patients. So within that capability, what you guys are offering is the ability for this company to include payment processing for that dentist office. Is that
correct?
Okay, let's go right into the topic. We're going to learn some more. Who's introducing the topic today? Is it thanks, Kim?
That would be me. But you already did a really great job of introducing it, Tulio.
I just painted the picture of where we're going.
Yeah. As chosen by Caleb. And I have to admit, I needed to do a little Googling before we got on today's show. But that's PayFac-as-a-Service, empowering ISVs to monetize, that's say that word 10 times fast. Monetize payments. How can PayFac-as-a-Service change the payments landscape for the better? Now, Caleb, I think you already painted this picture really good for us. You threw out going from 2 years to just 2 weeks to getting this going. But what else? Or if you could, I want to focus on the payments landscape. Could you please paint the current payments landscape for us, and then where that's shifting or what better means? Anything beyond the 2 years to 2 weeks coming to mind?
Certainly. Yeah. So when I think about the payments landscape, I typically divide it into 3 buckets. I think about software companies processing anywhere from $0 to $50 million a year in annual payments volume, between 50 million and 2 billion of annual payments volume, and then north of $2 billion a year in annual payments volume. And so when you think about the space historically, that 0 to 50 million sector has really been dominated by the likes of Stripe, Braintree to a lesser extent, but that's really what's turned Stripe into a $100 billion organization, is their dominance in the startup segment of the market. And then when you're talking about north of $2 billion a year in transactions, that's typically where companies are starting to have the conversation about, does it make sense for me to become my own fully registered payment facilitator? But there was this middle part of the industry, which I often refer to as like the PayFac wasteland, where there just wasn't a solution that really made sense for these businesses in this middle segment of the market. And so oftentimes they were turning to the legacy processors like a WorldPay or a TSYS or a First Data, but the technology and the customer experience that these companies were offering just really wasn't up to snuff. And so Tilled is coming in to really fill this void in the middle of this market, typically for companies processing between 50 million and about $2 billion a year in annual processing. We do work with companies that are smaller. We do work with companies that are larger, but our bread and butter is really this middle segment of the market that historically have had to really sacrifice between either customer experience or economics to bring a solution to market.
That middle class, we sure get pegged all the time. Every facet of life. Yeah. We hold it all up, but we don't get any of the help.
Right.
Not to get too political, but that's great. So you found this really perfect niche where Tilled can fit in really, really well. I love it.
Yeah, thanks. And I think, the kind of second part of that question, so that's kind of the piece around monetizing payments. So that's really, Tilled's core mission is to empower our ISVs, which are integrated software vendors, to monetize their payments. And typically those are these kind of B2B2C software platforms. But the second part of that question is, how do we change the payments industry for the better? And that's really something that I'm personally quite passionate about. The company that I started in college, the motto there was merchant services done right. And so it was this idea that, merchants, agents, everybody was frustrated with the experience that they were getting from all of these legacy processors. And it was things like, bait and switch tactics. You're brought a contract, and then, 2 months into the contract, the rate changes. And, companies like WorldPay and Toast are just notorious, for these kinds of practices. And so for us, one of our core principles was a rate guarantee. For the life that you were processing with us, we had this guarantee that we weren't going to change your rates. And so, we were really trying to come about the industry from a different angle and really offer this experience. And really, when you look at the relationship with our employees, our partners, our customers, really trying to do things better and do things differently, than those that came before us.
Okay, so just to clarify a little bit, so if I'm a software company and I am offering on my platform to my clients the ability to offer payment processing solution, as a software company, I'm monetizing this transaction because I charge a clearance fee, whatever that percentage might be. So is this how big of a money-making opportunity is this for the software? Is that the driver, or is it more the convenience and the differentiation to help their end clients have a more holistic kind of solution? What's the driver behind the ISVs to adopt this?
I think it's a little bit of both. I mean, it's certainly about the customer experience and offering a differentiated product to remain competitive in the marketplace, but it can be a massive revenue driver. So for some software companies, you're talking about them having the ability to make 2 to 5 times as much money from payment processing than they do on their core product. And so for some of these businesses, it really is like the core part of their revenue stream into their business. If you look at Toast, just went public, filed their S1s. I mean, they're literally making a multiple of money on their payment processing relative to their software fees.
Interesting. Yeah, I'm thinking gaming companies that do free subscription and they convert those users. There's a fee for that. I mean, that's obviously more of a B2C play, but you're talking about also businesses that license a particular software or platform or solution, whether it's a payroll solution or accounting, HR type of solution. It's interesting.
I can kind of break down the numbers,
please.
For like,
that would be great.
Let's say like a gym management platform that has 700 gyms processing $100 million in transactions. If that platform was working with someone like Stripe, they're probably giving somewhere around $3 million in processing fees to Stripe, and there's $0 in revenue for that gym management platform. And so the question that people are always asking is like, hey, how much money are we actually leaving on the table? Because Stripe's not actually telling me how much margin, Stripe is earning. And the reality is you're probably talking about somewhere between $800,000 and $1 million a year that software platform is leaving on the table by working with someone like Stripe. And so by coming to, a platform like Tilled, you're able to get in to that, payments monetization scheme and start earning a share of that potentially $1 million, that you're leaving on the table by partnering with someone like Stripe.
That's great. Let's talk about the first half of that equation that you were talking about, just the ease and sort of the user experience of this. Now, I know at the beginning of the show, you kept mentioning, processes about signing a PDF and scanning and give me this copy and giving that copy. So not only have you streamlined this process, let's say from the average 2 years to 2 weeks, but what does the actual sign up process look like versus the way it's traditionally done versus what it looks like with Tilled?
Yeah, absolutely. So I think we've talked a lot about the kind of PDF process and how messy that is. As far as the process with Tilled, we've got a fully white labelable onboarding experience where you can upload your logo, pick your primary and secondary color, and then you've got an online application form that you can send to your merchants. So that gym management platform or that dental software platform sends a unique link to that dentist or to that gym to sign up for our solution. They can typically fill out that form in a couple of minutes. You're talking about very basic information on the business, tax ID, address, owner's information, bank account. You click to agree to the terms and conditions. You're not uploading any supplemental documentation. And the best part is that when you click submit on that application, we can instantly underwrite those accounts. And so they can start processing payments in about a minute. And so you're talking about having the ability to start processing payments right away, which is so powerful for a lot of these businesses that, if you're waiting a week to get your merchants onboarded, some of them may drop out, of the sign up process while they're waiting that week and they just go sign up for Square or some other solution.
I have a question, Caleb. So we understand that if I recall correctly, there's something called independent sales organizations, right? ISOs, right?
Mm-hmm.
And which basically, this is from as little as I know, they basically resell payment processing services, right? On behalf of another company. And whereas payment facilitators provide the payment processing themselves, right? Not just the only exception, that's my understanding, is in a sub merchant basis. That's what I, from what I could gather. So this being said, how would you say that basically PayFacs and ISOs are similar, and in what way, or what are the differentiators? What are the differences?
Sure. So when you think about the ISO model, which is really where I came from, so I co-founded an ISO when I was in college. The idea behind the ISO model is that you're setting up a full merchant account for every single one of these, whether it's the dentist or the gyms or, whatever the end merchant looks like, you're going to be setting up a full merchant account for that customer. And that's why you have to go through this, 5-page PDF with wet signatures. You got to have all the supporting documentation, because fundamentally the bar is just that much higher to set up a full merchant ID for these small businesses. The difference with the payment facilitator model, exactly as you mentioned, this concept of a sub-merchant. So a sub-merchant means that someone is acting as the master merchant, which is going to be the payment facilitator. So the payment facilitator has gone through a process with their acquirer, with their sponsor bank, to get approved to be effectively this concept of a master merchant. And so the payment facilitator is going through a multi-month underwriting and vetting process with their acquirers, with their banks, to ensure that they have their own, underwriting procedures and protocols to be able to bring on what are called these sub-merchants, which would typically be the small business owner, onto the platform. And so the beauty of the sub-merchant model is that you fundamentally are lowering the bar and the threshold for what's required from a documentation, from an underwriting perspective, to get that sub-merchant onboarded onto the platform. And so you're able to get these merchants onboarded faster, onboarded easier, onboarded with much less friction. And so that's fundamentally one of the big allures of the payment facilitator model.
Oh, I see. Okay. Now, regarding there's something else that kind of came to mind, is regarding the ability to leverage technology, right, to improve things like reach and service delivery, even profitability, right? Profitability. So, would you say that these elements, reach, service delivery, profitability, are larger, or the ability to leverage technology is larger on a PayFac as opposed to an ISO? Or what can you tell me about that?
Yes and no. So not every PayFac has their own gateway. And so when you think about the payment facilitator model is largely around the kind of underwriting and the onboarding process, whereas what you're talking about is like, how do people actually process payments through the platform, and whether or not that is a good or bad experience, and the quality of that technology oftentimes comes down to what I would think about as like the gateway. So the software platform is going to be integrating some sort of payment solution into their platform to be able to accept payments, to handle, reporting and all of these things. And what's nice about our platform is that we've built our own in-house gateway. And so we're not leveraging, these legacy third-party gateways like an NMI or an authorize.net that, they had their heyday 10 years ago. And if you look at the platforms, they look about the same as they did, 10 years ago. And so from a reporting perspective, they're just not offering, a modern payment experience to these clients. Whereas, we've got an in-house gateway that we're constantly adding, additional functionality to that, in addition to the kind of PayFac capabilities of instant onboarding, are really providing this modern payment experience for our customers.
Great. Thank you, Caleb. Kim, I know you have a question, please.
Yeah. So let's go with this word modern. What do you do as a founder, an ideator, or Tilled? Like, how do you keep yourself up to speed, on trend, on the lookout for what's coming next? Do you have any tips or tricks that you want to share with people like you?
Yeah, certainly. So, I think I spend a lot of time on LinkedIn. I think anyone that knows me well sees, a lot of content, coming out from me on LinkedIn, but it's really a two-way street. Like I'm getting all of this data from, all of the other people in the industry. And so I spend a ton of time reading articles and looking at competitors and seeing what other people in the space are doing. Some things are relevant to us, some things aren't, but at the end of the day, it's data. And I just love the fact that you've got this readily available, free source of data. And I think especially since the pandemic has hit, there's so many more people that are active, especially on LinkedIn in the business community. And so it's been a fantastic way for me to, keep tabs on what's happening in the space. I also just talk to people. So, try and make friends with other people in the space and compare notes and, hey, what's working for you guys? What's not working, for you guys. So don't be afraid to go talk to, your competitors and compare notes.
I'm curious to
the epitome of confidence. Don't be afraid to talk to your competitor.
Yeah.
And speaking of confidence, I'm curious, how did you manage convincing investors, right? I mean, this is a long tail investment, right? It's like, hey guys, you're not going to see much for 2 years because it's going to take that long just to get us approved. to be a payment facilitator. What was that like? How did you manage through that?
So the reality was I waited a while to raise money. So I founded this business as a solo founder back in January of 2019, and we didn't raise outside capital until November of 2020. And so it was over 18 months before we actually raised outside capital. And so by the time I was going to raise outside capital, we had, not all of our ducks in a row, but we had most of the ducks in a row. And so it was really, myself taking a lot of that early risk and putting in the early cash where there was not necessarily a light at the end of the tunnel, 3 years ago when I was just starting to work on this. When I was doing my fundraise, I started that process a couple months into COVID. And so the hardest part for me was that it was the first check that a lot of these guys were writing virtually. And so, I've still not met a fair amount of our investors in person, which today is not all that abnormal. But, if you think back to the early days of COVID, it was really weird that you're going to potentially give millions of dollars, to someone that you haven't met. And so the reality, it was a ton of time on Zoom trying to build that trust and build that confidence, with these investors that they could trust me, with their money to go execute on this mission and realize the vision that I had for the company.
That's awesome. What an interesting journey, right? So I'm curious, which companies out there aren't doing this that should consider doing this? I mean, it sounded as though there's big money to be made for certain companies that may not be doing this today. May not be actually processing or facilitating the payments themselves, or might have some antiquated old school system that charges fee that doesn't actually monetize for them. So which kinds of companies you guys are targeting that might be listening that should be looking at this?
Yeah, so I would say our typical target customer is going to be a B2B2C software platform where they're providing services to typically an SMB who then has customers of their own. So we've talked about kind of dental software platforms. We've talked about gym management platforms, but it could also be things like field services. So if you're selling a software to electricians, plumbers, auto repair, it could be like property management platforms selling to landlords that are then collecting rent payments. It could be, insurance software platforms. It's really any like platform level business that's then selling a service that has integrated components, which I think payments is really a logical, add-on to most of these software platforms. It really makes sense for them to consider, something like a PayFac-as-a-Service solution to figure out how to monetize these payments, because the reality is you're going to be leaving a substantial amount of money on the table if you're not finding a way to monetize these transactions.
Could this also be linked to blockchain payments at all? I know we're talking about keeping on trend, modernizing. That seems to be the way things are headed. Do you have that in your sights?
So it's definitely something that we talk a lot about. I think between blockchain and crypto, when you start looking at, let's call it the 2-year roadmap, for Tilled, those are always things that are going to be coming up in conversation, because for us, we're thinking about ourselves as the infrastructure and the rails, for our businesses. And so if the consumers are going to demand that, hey, crypto payments are the way, that we want to process transactions, I think it's certainly something, that we're open to. And if you look at just in the last 2 years, how much more mainstream, crypto processing is than it was, 3, 4, 5, years ago, I expect that trend to just continue accelerating. And then it'll be up to platforms like us to decide, hey, do we want to offer this as, an integrated service to our customers? And I think the answer is at some point we will.
Yeah, you don't want to go Blockbuster on the
Certainly not. Certainly not. I think for now we're pretty far ahead of the curve, but you want to stay that way.
Good for you.
Great.
Any thoughts on expanding into government sector where they might need this kind of capability?
Absolutely. Yeah. I mean, government sector is certainly something that's an area of focus for us. They're typically quite large, payments volumes. And one of the nice things about the government sector is they have the ability to benefit from typically lower interchange processing rates. Plus, they're typically passing along the transaction fees to the consumer. So, you're going and paying for, your tag registration online, if you pay by credit card, you're typically the one paying that, I don't know, 2.5, 3% fee for processing. And so for, a lot of these entities, there's definitely a tremendous opportunity, for them if they're interested, to be able to generate a revenue stream off of those transactions.
Caleb, well, we're close to approaching the final segment of today's conversation. So I'm curious as to the human element. Even whatever great company might exist, it requires people, right? It requires folks who can excel at what they're doing, especially in engineering. So I'm curious, because of everything that we've gone through the last year and a half, there's so much going on in terms of payments and platforms and everyone going online, the digital world. So, and I would assume that this case might not be the exception of the people. How has it affected the people that constitute the foundations of your company, if at all, if applicable?
Yeah, I mean, I think people are a tremendously important part, of our success and the success of our platform, because we're not just giving people APIs and saying, here you go. We certainly depend on, the quality of the people around us. And I think from a culture perspective, we're a remote first organization, which I think if you talked to me 2 years ago would have never been the case. We would have been building a business, locally in Boulder. But, as the pandemic, set in, it's like, well, I'm not going to the office. Why do we have to, demand that we're going to hire people, locally in Boulder? And so now we've probably got, 70% of the team that's remote at this point. So I think that's probably been, a pretty big adjustment for us. But when you think about the concept of hiring remote, culture and values actually become that much more important, because you have to trust that, these people that you've never met in person, you may not meet for 6 or 12 months, are going to be, communicating the right values to your partners, to your customers, and setting the right tone, for the other, employees on the team. And so I think for us, it's kind of forced us to have this spotlight around culture and company values, and setting this idea of, transparency and trust and fairness within the organization that I think is a huge positive and a huge asset for us, because ultimately we're looking to attract people that are excited about the mission of changing the payments landscape for the better, and see the vision, that I have for the organization, are excited to come be a part of that.
Thank you, Caleb. I appreciate it. So there you have it, folks. Great company,
All right.
Great people.
Exactly. So we're up on time, unfortunately. There's a lot to learn here. Very encouraged to hear about what you guys are doing. Certainly see lots of potential with cryptocurrency. I mean, there's some government entities that have actually adopted that as a formal way of processing payments in other countries. So there's opportunities there, and it's not going to go away. So we hope that you can grab onto that. There's great potential. Just one final question as we wrap up. What's your journey been like? It's been a long road. What have you learned about yourself through this process as an entrepreneur?
Yeah, great question. I think I've had a lot of fun. I think for me, especially just in the last 4 or 5 months, as we've really started scaling up the team, we've gone from 12 people to about 36 people just in the last 5 months. And I think it's really forced me to shine a spotlight on myself and say, what am I good at? What do I enjoy doing? And what are we better off, hiring other people to focus on? And I think as an entrepreneur, that's a tough thing to do, to shine that spotlight on yourself and say, am I really the best person to be handling, this role? And I think for me, one of the reflections that I've had is like, where am I a blocker in the business, and trying to identify those areas as early as we can, so that we can go proactively hire people to bring in, these great talented people to take over the things where I'm a blocker that's going to prevent us from scaling the business the way that we could, if I was just maintaining a stranglehold on these various aspects of the business.
I love
congratulations.
that question. Where am I?
Sounds like a lesson in humility as an entrepreneur. Amazing. It's funny. You could be the go-to person for everything, and you're not going to scale, and you're going to be leading people like children, or you could empower people to be adults and let them help you grow the business. So
Absolutely.
sounds like the
Absolutely.
latter is the more effective approach, but it definitely requires humility. So congratulations for learning lessons, and thanks for being with us today. We've learned a lot. Thanks for sharing your journey with us. Stay with us as we go off the air in just a minute. Carlos, what else we got coming up? We got 2 more shows this week, right?
That is correct, Julio. So tomorrow we'll be speaking with Joel Cumming, the CTO of Skywatch. The topic, what would you build if you could see everything on Earth every day? I look forward to that one and see what's in store. And then finally on Thursday, we'll be speaking with Jesse Solomon, the co-founder of Miki Trading, trading platform, commodities trading platform. And the topic, as you can imagine, is commodities, right? And technologies, bringing an antiquated industry online. That's what we have for this week right here on Dojo Live at 12 p.m. Pacific as usual. So join us. Don't miss them. Don't miss them, and be safe. And thank you. And of course, thank you, Caleb.
Thank you guys for having me on.
Thank you.
See you guys back